Welcome, traders. We have two expiries tomorrow. So we have the weekly expiry as well as the monthly expiry. So we need to keep that in mind while taking new trades tomorrow. So an interesting day. Prices gap down and then they tried to move back up to close above this flat 200 average. However, the sellers were very aggressive and they put down the prices back to its bottom, and eventually the bar closed like this. So what all is happening in the market. One thing is very clear, that as sellers are very aggressive and they are not letting the buyers to take the ground from them. So keeping that in mind, and with the same idea that prices might move down further below from here, we should have take the new trades in the same way. We should have the bias which should be neutral to bearish. So although it looks like that prices are near to this daily support zone, however, I think this support will get broken eventually. So do not trust it now, because we have this gap down day, we have this another gap down day, and it looks like that markets are in a complete bearish mode. If you look at the 60-minute time frame, all these supports were broken, and now prices have finally reached to this level here. And at this point in time, although we have the weekly expiry tomorrow, but the weekly time frame tells us that prices can even go down further from their current level, because there is no immediate support which can save the prices at the current moment. So with all that in mind, we have our bias in place, that we should not run after the bullish trades just because the premiums are now very cheap. And I think it would be a better idea to go with the trend as of now, because the trend to the downside looks very strong. So that is what is happening in Nifty. And just to give you the levels, so we have this 16,700 and 16,600 band of support here. So just take a note of it, which could give some bounce to the prices tomorrow if the prices will come back and take a rest on the support. But we need to see in the morning that where the US market has closed. That would again give us a clear picture that where prices can go, and where could be potentially this market will end up in tomorrow's expiry. So with that, let's just move on to Banknifty. And just one more thing, that all these levels will now act as resistance. So they are still intact. They are holding their positions tightly. So as of now, these are the current levels for the resistance. And as I just mentioned, that for the support, we have 16,600 and 16,700. Now let's just take a look at some data here. So in the option chain, we have the highest open interest at 17,000 in the call side, and we have 16,800 with the highest open interest in the put side. So 17,000 is somewhere here, and 16,800 would be at the current levels. So the data is telling us that market may remain in the same range between 17,600, 16,800. However, that can change anytime depending upon where the market will open and how aggressive the sellers or buyers would be, keeping in mind that we have two expiries tomorrow. In Banknifty, prices have moved below the support zone here. And when we are below the support, that is very bearish. So there is no immediate support in the daily or in the weekly. The only line in the defense is this rising 20 MA, which could give some support. So this area, which is around 37,900, is now holding to some extent, is trying to hold the prices. But let's see where the prices will go. If we get a gap down day tomorrow in Banknifty, then we should expect some bounce in the prices because we are already down too much. And another gap down would not be a professional gap down. It would be a very novice gap down. So don't get trapped into such gaps which comes after multiple bars down in the same direction. So just keep that in mind. And we do not have any immediate support. As you can see, only thing in the daily time frame is the 200 average, which could give some support in my opinion. But let's see, that also depends upon where the market will open. So with that, let's just see what is happening in US markets to get some rough idea. So as of now, markets are in green. You can see Dow Jones is moving to the upside. Yesterday, when we were analyzing the markets, prices were somewhere here, and we did not expect, or I did not expect that prices will go below these two candles, the low of these candles, but they moved down. So it made me wrong. The assumption actually failed. But let's see. The gap between the moving average and the price is quite big. So my expectation is that if not yesterday, if not today, tomorrow they have to take some rest to catch up with this falling moving average. So maybe they will not close in red today. So if these US markets move down, or let's say if they just consolidate and close in green, that would to some extent will definitely change the sentiment of our markets as well. So SPY, the same scenario here. Russell has again the same scenario. In fact, this small cap index is looking even more bullish for a short term. So with that, let's just wrap up the session here. Hope it will help you, and we'll talk to you soon. Take care. Good night.